Happy Monday, everybody. I hope you had a great weekend. Today is March 25th, 2024, and this is your last of March, last Q1 Monday market update. Yes, it's hard to believe, but this quarter is just about done. Wow. Let's review last week's market action and let's preview this coming week. This past week was a big week, but more quality than quantity. Before we start, good or bad, you can decide, but the government did not shut down last Friday, so we live to fight another day, and rest assured, fight they will. Congress, that is. Most of the issues have been kicked down the road until the fall, since nothing much is going to be going on in the fall, like a presidential election. I'm sure getting another spending bill passed will be much easier then. So please sense, of course, my skepticism, but for now, we can ignore that. Right. We'll see. Stocks were mixed at the open on Monday as there was news in the mega cap tech stocks, Apple and Google this time. For now, there was a Bloomberg report that they are in talks to use Google's Gemini AI technology for the iPhone. Now, quick info on that. Why is this so big? First of all, reports are that Apple has been talking to OpenAI as well. So either way, this is what seems to be an outsourcing of AI for Apple, sort of like the way they don't have a search engine of their own. They pay Google about $18 billion. They did so in 2021 at least, for the honor of using that on the iPhone. What will the AI license look like? Regulators don't like the Google search monopoly on the iPhone. Not sure what they'll think about this one. Remains to be seen. Not much has been moving on that side recently. Too hard for the regulators to follow the speed of movement. We'll have to see about that this morning. That changed over in the EU, so we'll see what goes on. We did get housing numbers, and they were good, and all of that had Treasury yields climbing to new recent highs over that 4.25 level, even as high as 4.35. Excuse me. Rates are focus of the week, even on Monday, with all the tea leaves being read through the lens of the Fed. Quick primer for where we have come from. On January 31st, markets were expecting 6 rate cuts in 2024. First one this week as of Friday's close. Markets are looking for 3 cuts. The first one may not be until June or July. We're down to a 50% chance of a cut in June. That is nowhere near where we were in January, and markets up big since then. So you got to remember, we have to keep valuations in mind, long term at least. Oh, and the biggest news of the day, NVIDIA, the market darling, the CEO Jensen Huang gave the keynote at the AI Woodstock, as it's being called. He's been able to talk up his stock over 75% year to date and over 240% in the past 12 months. That's just as of last Monday. Maybe it's time to breathe. After hours, down slightly. As of Tuesday morning, it was down in the post-Woodstock trading session. The week was just getting started, but by the end of the day, the Dow was up 0.25%, S&P up 2/3%, and the NASDAQ was up over 0.75%. Again, that was Monday. On Tuesday, stocks gave back about half of the gain from Monday at the open, but spoiler alert, that was not to hold this market down. Mega cap stocks led by NVIDIA led stocks lower earlier, but with a host of eco data and pending Fed meeting, markets stabilized, then reversed course and headed higher, led by, yes, you guessed it, mega cap tech. Bank of Japan hiked rates for the first time in 17 years, and the Reserve Bank of Australia left rates unchanged, but indicated that rate hikes are over. A strong 20-year Treasury auction, as well as some well-placed comments from NVIDIA CEO, yes, again, had the S&P hit new highs. Dow closed up about 1%, S&P up about 0.5%, and the NASDAQ up just under 0.5%. Markets were set for the Fed report and the press conference. While waiting, DWS raised their S&P target to 5,300 and said that fair S&P PE estimate is 20 to 21.5 times forecast earnings. By the way, not many people see that as a reasonable, sustainable PE. Some do, or else there's no way to get to 5,300 plus on the S&P. We had more of those S&P estimate hikes today. Fed presser day, aka hump day, or Wednesday, had stocks open at the lower at the opening bell, and then paralysis gripped the traders and the markets while the waiting game began until 2 o'clock Eastern for the release, and then 2:30 for the press conference. UK eco data supported disinflation, and on the other side, luxury goods maker Kering, the parent of Gucci and other luxury names, missed estimates and reported weak consumer demands in Asia. Stocks leveled out and just went sideways until Fed time. Dot plot, another great 2000s word, was in line with the 3 hikes in 2024, and the soft landing talk continues. Powell was non-committal either way, and the S&P broke out to the upside. Overall, for now, the bullish mantra, falling inflation, impending rate cuts, and AI enthusiasm is alive and well. Until something changes that, the path of least resistance is higher, at least for the near term. We do have 13 13 weeks before the next Fed meeting in June. That's a lot of data to come along if we're going to stay focused on this. The Dow was up more than 1%, the S&P up just under 1%, and the NASDAQ was up 1.25%. UBS did pen a research note: November election outcome will affect stocks. Next 8 months are likely to be exceptionally distracting, as they say. This is in line, as we've been talking about. Short-term dislocation is possible. Get a plan and stick to it. Thursday had an extension of the post-Fed surge. Markets gapped higher at the open. Micron stock was up big as semiconductor stock talked about. You guessed it, it's AI chips, sold out until 2025. In case you've never studied markets and market history, it is amazing that back order and full order books sometimes just don't make those estimates. Maybe it will this time. That is the expectation. There was a surprise rate cut from the Swiss National Bank. And aside from it being the first rate cut out there, it is the Swiss National Bank, for goodness sake. Really? Come on now. Initial jobless claims, continuing claims, composite PMI, expected home sales, overall nothing yet to do, as I mentioned a moment ago, to change the narrative. Not yet. Notable news, I guess. Though it is going to get the ink, I don't give it so much. Apple is being sued by the government for antitrust violations. Again, the EU works on that again today. The line I liked most is when the anchor on CNBC asked the Connecticut Attorney General why it is that the innovation that Apple has done over the years that has made it harder to compete against their product is illegal and not capitalism. I'll let you judge. You'll have plenty of time. The government suit against Microsoft started in 1998 and was not decided until June of 2001. So by the end of the day, the Dow was up 2/3%, S&P up 1/3%, and the NASDAQ was up about 1/4%. Stocks opened little changed on Friday, but on the way to a record week. Markets did not leave everything unscathed. Lululemon was down close to 20% on the day after earnings mixed with too much warnings and probably not enough use of the term AI in the conference call. Not sure how AI fits into the athleisure markets, but we know it probably has to have that somehow. Nike was also down with poor numbers from China, but the shipping company that moves much of these goods back and forth, FedEx, was up 7% on good news. For the day, the Dow was up 0.75%, a lot of that from Nike. S&P was down less than 1/4%. The NASDAQ was up just under 1/4% for the week. The Dow was up almost 2%, the best week of the year for that index. S&P up 2.33%, the NASDAQ up almost 3%. Let's look into this coming week. Just to hit this one first, the big number is at the end of the week, the PCE and core PCE. This is the Fed's favored measure of inflation, as far as they tell everyone. That comes Friday, and before you get ready to sit on the edge of your seat, finger on the buy or sell button, Friday's a market holiday, Good Friday. We'll get the news, but no reaction until Monday. Before that, we'll get some housing data, consumer confidence, the high-frequency labor numbers, and University of Michigan data on consumer confidence and inflation expectations. It is watched, so we'll have to watch that. We'll also hear from the Fed heads again. Bostic, Goolsbee, Cook, Waller, even Powell and Daly will speak. So that will bring the short week to a close. Only 4 days of market action this week. Excuse me, but we still do have a Monday today to deal with. So stay in touch. Call me to talk more about this and even more so your plans and your goals. I'll be back on Thursday with a new planning video, then Monday with a recap of this 4-day week. Have a great week.